All right. Hello, everybody. Welcome back. I'm sorry I'm about 2 minutes late on here. I was just connecting a couple things. Um, we're here. We are here, and we have had one hell of an after hours. This has been very interesting, to say the least. It's been very interesting. Okay. It's been very, very. Mom slipped the dinner plate under the door. Philip, you're hilarious. So obviously we are all here because we've had some interesting stuff happen over the past I would say a couple of hours. What, it's 8 o'clock? Yeah, since 4 o'clock to 8 o'clock. We've basically seen the transformation of where the stock market is essentially deciding to make its bets. Okay. This all starts with where the stock market thinks the world is going. And as a result of the stock market placing their bets in a particular segment of essentially or sector of the overarching market, that is influencing and dictating prices for the rest of the economy. And so that's what we are here to talk about right now. Now, give me 1 second. Let me just exit out of a couple of tabs so I clear up some things. We're going to make this a little bit easier, and then we'll get into it. Shout out to the 96 people that are here. Thank you for being here. Jimmy Lynn, Matt Goldback. Can we get some buyout talk? We can talk a little bit about buyout. That's a very interesting thing. We'll talk about that. Tabian, Trader Joe said Eeyore was right. Thank you all for being here. Now I have 30 minutes or 27 minutes because we have Finance Junkies, and we'll talk more about this on Finance Junkies starting at 9 p.m. Eastern today. But I wanted to go exclusively talk about Palantir for the next 30 minutes before we get into that. So let's take a look first on just what happened after hours with Palantir as we pull up the stock. We had a massive surge after hours, and we're now at $13.13. Right? So this is kind of what happened after hours. We were here. We were at 1233. By the way, today was a horrible day for the market in terms of just overarching red across the entire sector. If you were a part of the market open, we were going through the entire right side of my screen was just red. Everything we saw that was red. And you had Palantir that was holding up surprisingly well at around $12. And then after hours, we broke through around the 1250, 1260, 1270 range, and then we crush after hours 1355. We were 45 cents away from this going to $14. And 45 cents away from this becoming $14 is insane. Bro, I'm officially in the green. I appreciate you. I was $1 away at one point in being in the green, which is just insane. Guys, I'm sorry if the quality is not that good. Give it like 2 seconds. I'm sure the internet will get back to normal. It's being stupid right now for like literally no reason, but it'll get there in a second. And so as a result of what we saw, that is where we got the market to be able to go up. Now, the reason this happened is because we had NVIDIA stock do this after hours. NVIDIA stock was trading at 305. It was actually retrading this morning, and we had this monster rally to $391. NVIDIA was $391 at one point after hours. It is now settled in to about 381. Now, why did this happen? The reason this happened is because NVIDIA told investors that we are not going to get, we are not just going to do $7 billion of revenue. We are going to be doing $11 billion of revenue. And when a company says they're going to beat earnings by $4 billion in terms of their guidance, then things are going to get really interesting. Things are going to get really, really interesting when you beat earnings expectations by $4 billion. And so this hype that we saw on NVIDIA going from 305 out to 391 at its high is what led to the Palantir pump, in my opinion. I mean, there's no explanation for this other than the algorithms that control the institutional investors that manage hundreds of billions of dollars for their portfolios have stocks that they've allocated as AI plays. And these automatically buy and sell based on certain variables that they plug into these very complex algorithms. And when one stock in a sector, for example, if you put Palantir and NVIDIA in the AI sector, recognizes that it's up quadruple or whatever, it was like 30-40%. I think it ended at like 25% after hours. Then other stocks are going to get some buys. They're going to get some big buys. And as a result of getting them some big buys, that is going to lead to a big run up, right? And that's what ultimately happened to Palantir. Now, that was the first thing. Okay, that was the first thing that happened to Palantir. I think algorithmically, a lot of institutional investors decided that if the AI hype is real, which by the way, NVIDIA, I just want to take a second on this. NVIDIA being able to justify the valuation that it's at right now, is because the numbers are disconnected from what investors think is the only real play, or one of the only real plays, right? 1 out of 4 or 5 companies that is going to be able to supply the demand for where the overarching market is going to go over the next decade, which is going to be in an artificially intelligent world. And that requires chips, that requires processing, that requires compute, that requires GPUs, that requires all of the things that NVIDIA is able to provide. So the numbers in NVIDIA don't make any sense from a traditional perspective. They didn't make any sense at $232. None of it made any sense. But what does make sense is that other stocks that are in the AI space will get some residual value from NVIDIA going up, because NVIDIA is in that spot for the NVIDIA is the winner when it comes to AI. Okay, so that's what we saw in NVIDIA, and that's why NVIDIA just went to the moon. Then we have the star of the show, Snowflake. So this is where things got very interesting. Snowflake was down 12% after hours. And, you know, the stuff I'm about to say right now, I know a lot of people saw my tweets. It's not because I hate Snowflake or anything like that. Snowflake's a fine business, but it's compared to Palantir a lot from a competitive perspective. And I think, because it's compared to Palantir, we have to discuss why Snowflake has a massive valuation compared to Palantir. Snowflake at like a $57 billion market cap, Palantir roughly half of that now, right? At one point, Palantir was like, 7, 10, 8, or about 12, $14 billion. I think 12 billion was the lowest market cap that Palantir went to. Why is this happening, right? What is the overall reason for this? Snowflake collapsed because their guidance was not good. Okay. Their guidance, they basically said all of the things they said last quarter for how they were going to do went out the window in this earnings call, and investors did not like it. Now, Snowflake already has a massively premium valuation, one could argue. And so if investors don't feel like they're executing against that valuation, then it's not going to go well for Snowflake. Here were the numbers on Snowflake. First quarter revenue, $623 million, estimated at $609 million. Okay, so revenue that they beat pretty nicely. Snowflake sees second quarter product revenue, $620 million to $625, estimated $646. This is the one that got them. The market thought they would put up $646 million of revenue. Snowflake said they're only going to put up $620. That was not good for Snowflake. They see full year product revenue to $2.6 billion. Palantir is going to put up about 2.1, maybe 2.2 billion. The market expected 2.7 billion. So they're going to do 500 million more, or 400 million more than Palantir, but they were supposed to do 700 million more than Palantir, and they're down 100 million from what the market saw. Then they see their full year adjusted operating margin 5%. Investors saw 6%. So not only did they massively miss on product revenue for 2Q and product revenue for the full year, their adjusted operating margin is starting to go down as well. Probably the reason the adjusted operating margin is going down is because they spend so much money on sales and marketing and in comparison to revenue, which I think we're going to talk about in a second as well. This right here is what led investors to dump the stock when it went from 177 to 153. Remember, this stock was at 180 just a couple of days ago. If we look at the 1 year on this stock, it's been pretty dicey, but it started the year at 132, got to some highs of around, 190, 197. That's August 2022. We got to a high of around 100. Yeah, recently 184, May 18th, 184. It was at 177 that it closed, and then it dropped today after hours from there. If we look at the max chart, Snowflake IPO'd at $250 or $240, and it ballooned up to $387 by December 4th, 2020. Got back there around $392 November 2019 to 2021, and then since then it's been on its decline. Now, again, if we go year to date, it is up about 30% year to date in comparison to some other stocks in the SaaS business. That's actually pretty low. And then you got the decline here. Now, do I think this decline is going to last forever? I don't know. I mean, we're going to see. The expectations weren't good enough, so there's no underlying catalyst for why Snowflake would go higher. Now, one thing that's interesting to understand about Snowflake is this right here that I'm about to share on my screen. Here you go. So Snowflake is, they already did it? Oh, they bought it. They bought it. So there's not a rumor anymore. Here we go. They bought it. Snowflake has acquired Neva to bring intelligent search to its cloud data management solution software. Now, for those that don't know what Neva is, this is very interesting if you're an investor in Palantir, because this tells you a lot about what the moat is about around Palantir compared to a company like Snowflake. Neva was a search engine that was a rival to Google. The guy that made Neva was the senior vice president of advertising for Google. Okay. So this is a guy who had like 10 to 15 years of experience working for Google, who decided to make his own search engine called Neva. Now, why is he making a search engine called Neva? Because he was upset with the advertising model. He wanted people to just pay a premium product a price per month, and Neva would then be available to you, kind of like you pay a Netflix subscription, right? They shut down the consumer business for their search engine on last Friday. So they put out a tweet. The guy, he said, "Hey, we're sorry to shut down our consumer search engine. The reason they're shutting it down is because they can't compete with ChatGPT and Bard." That was kind of their exact words in terms of the reasoning to shut down the search engine. Now, their enterprise search engine is still alive, and Snowflake has officially acquired that. Now, one may be arguing, why is Snowflake acquiring an enterprise search engine? The reason for this is, as we see in the article, he pointed out that Neva's ability to leverage generative AI in search was one of the things that drew Snowflake to the search startup. That's why Snowflake is acquiring Neva, a search company founded to make search even more intelligent at scale. With generative AI searches, users can ask questions and interact with the search tool, changing the way people search in fundamental ways. Basically, they want to be able to implement large language models at scale via generated, and which will lead to generative AI in terms of being able to get answers as those LLMs are trained on data, and then implement them within organizations to be able to kind of bring a product that allows this type of search engine that's just artificially intelligent. That's more smarter than a basic search engine that just gives you links. I used Neva's consumer search engine, and it was honestly not that good because it was just like Google. It was just showing you links. Now ChatGPT and Bard have upgraded the race. Why does this matter for Palantir? This is what Karp has been saying for a very long time. Most competitors, at the end of the day, have to buy and acquire other companies because they cannot innovate on their own. When ChatGPT came out and revolutionized everything, Palantir didn't try to acquire some ChatGPT type company, some company that does generative AI. I mean, we don't even know the financials behind Neva. We don't know any of their user growth. We don't know any of their, overarching technology. We just know that they're putting the words generative AI, which are the two of the biggest buzzwords that exist on the planet right now, in front of their startup. And a guy who worked at Google made the startup. Snowflake is excited for it, and therefore Snowflake is acquiring it. There is no data that Neva, which is, again, it was a consumer search engine that is now pivoted into an enterprise LLM-based generative AI application, is going to somehow provide an AI moat to Snowflake. But that is what Snowflake is hoping for. And the argument that Alex Karp has been making, that he's been getting a lot of shit on in comparison to Frank Slootman, because apparently Frank Slootman is the operator and Alex Karp is the philosopher. Karp's philosophy has been big companies, they get old, they get stagnant, they get bureaucratic, they get non-innovative, and so they acquire. Palantir has not acquired a company in years because they're actually building the tech. Now, the downside to that is that the sales and the go-to-market is not as good as a company like Snowflake, which I will give Snowflake credit. They have 8,000 clients. Their go-to-market is absolutely phenomenal. The problem is, if you go to market and you don't have a product that's worth bringing to market, it doesn't fucking matter. At the end of the day, I will pick product over sales any day because sales can be fixed. Product cannot. Product cannot. And so that's the fundamental question right there. As you can see a little bit in the founders writing in their blog, many of the techniques we have pioneered with small model size reduction, latency reduction, and inexpensive deployment are the elements that enterprises really want and need today. We are actively exploring how we can apply our search and LLM expertise in these settings. Look at how ridiculous this sounds. Snowflake is acquiring a company that is saying, oh, we are actively exploring how we can apply our search and LLM expertise for enterprises. Motherfucker, this shit's here. It's happening. It's right now. And Palantir talked about it a month ago. It's called the AIP platform, and they're demoing it with, in Karp's words, many, many clients. They're seeing more demand that they've ever seen in the past 20 years because this is happening now. This idea that enterprises are going to be able to use search and LLMs to make their businesses more effective, efficient, etc. That's happening now. Governments are doing that right now. Palantir's AIP for defense is happening right now. It's being implemented, one would argue, in Ukraine right now. So the idea that Snowflake is acquiring a company that is actively exploring how they can apply, like, your active exploration is not an exploration because the exploration has started right now and it seems like you're playing catch up. And again, this isn't any shade at Snowflake, but this is what these companies have to do when they don't have a tech moat. they have to buy companies that provide somewhat of a tech moat. And I don't want to bet on the company that's acquiring a company that thinks there's going to be a tech moat, because honestly, this acquisition is just for investors to lighten the blow of what earnings was. That's my opinion of this acquisition. We have no idea if this acquisition is going to do anything to bring intelligent search to Snowflake's clients. We do know that Palantir has a moat around technology and that they're not acquiring companies, they're actually innovating. And so that's the very interesting part to kind of play with and try to have a better understanding of what's going on. 400 people, thank you for being here. I'm going to be live for the next 13 minutes talking a little bit more, and then we have Finance Junkies where we'll be discussing this more in depth at 9 p.m. Eastern. I'm going to look a little bit at the chat, see some of the comments, but that's kind of the idea for what has been going on in terms of why Palantir's up and why Snowflake is down. Sold half of my NVIDIA when it hit up 100%. That's amazing. Congrats to you. Let me just pull up Webull as I'm talking so we can take a look at some of the stocks that are going up and down as well. But does that make sense? Like, to me, that is why the market tanked Snowflake and gave Palantir a little bit of a premium. Even if you think Palantir doesn't deserve this premium right now, which is debatable, 1,000% debatable. And I wouldn't even argue against someone in a substantial way that says Palantir doesn't definitely deserve some of the premium they're getting right now. But what I will say is I can argue that Snowflake's premium in comparison to Palantir is probably ridiculous in the grand scheme of things. It feels a bit ridiculous. And so there we go. We have Palantir here at $13.13. Let me just pull this up. Okay. Can't believe Buffett owns $1 billion of. Oh, Matt, thank you so much for saying that, because I actually, this is another thing I wanted to pull up. 1 second. So let me pull this up real quick. This is an article from CNBC from 2020. Okay, let me share this real quick, actually. Thank you, Matt, for bringing that up. This is what I tweeted as well. So this is why I think Wall Street gave Snowflake the $250 IPO and very frothy valuation. Warren Buffett's Berkshire Hathaway just made a fast $800 million on Snowflake's surging IPO. Buffett knows nothing about technology, and that's all respect to Buffett. He'll admit he doesn't know anything about technology. Why is Buffett betting on Snowflake? Like, why is this happening? This doesn't make any sense, right? This surprised me ever since I saw this happen, because I was like, there is no reason Warren Buffett should be making almost $1 billion on Snowflake's IPO. The reason for this is likely because there was a lot of handshake deals in a bunch of different places. Someone told him, hey, this is going to go. You're going to make some money. It's a good deal. You want to make some money, make some money. You don't have to worry about if it's tech mode or not. You're just going to make a quick profit. And I think Wall Street ultimately ended up giving Snowflake a ridiculous valuation because Warren Buffett was involved. Berkshire Hathaway was involved. And you want the cosign of Berkshire Hathaway if you're a company. But if he's involved, he's going to want a nice valuation and he's going to want a return on his money. And that's what Snowflake was able to deliver to Berkshire Hathaway. But that doesn't mean the valuation was ever justified. People say Snowflake's growing at 100% year over year. Yeah, but they're spending 70% of their revenue on sales and marketing. 70% of their revenue on sales and marketing. Like, at some level, we've got to have a conversation here on what's going on. Like, how is this happening? Like, when you're spending 70% of your revenue on sales and marketing, that means that a lot of your growth is ineffective, inefficient, or, to be quite fair, the growth just doesn't make any sense. The growth doesn't have a core underlying purpose behind it outside of the external money you're spending to get that growth, which means you're not actually growing at a substantial level. You're just building out these sales force to create that growth. At the end of the day, the reason I'm saying that's not real growth is because if there's not a product that people actually want, it doesn't, like, how does it survive for the next decade? How does it adapt? Just acquiring Neva, is that going to be that Snowflake adapts? I don't know. I don't think that's the way it happens. And so we will see. Oh, thank you, Crossroads, for bringing up stock-based compensation. I forgot to talk about this. Let's have a fun call or little conversation about this. So Snowflake stock-based compensation. Let me just pull up a tweet real quick. I tweeted this out to get the exact numbers. This is insane. Okay, what I'm about to show you is absolutely insane. Like, anyone who is owning Snowflake stock, I really think you should just think a little bit about why you own the stock after you see this number. Okay. Snowflake stock-based compensation increased from $172 million in Q1 last year to $264 million this year. I will say that again. SBC increased. That's not 264 to 172. That's 172 to 264. That is an increase of 53%. They are increasing stock-based comp by 53%. Now, why does that matter? because people had the nerve to be decimating Palantir over stock-based compensation, which, by the way, I think their stock-based compensation was ridiculous over the past couple of years. However, every Palantir bull in the community that I know, the way they justified the SBC was that they're hiring talent to make products that matter. That was the one response you could give to high, because like you honestly, you couldn't justify the crazy stock-based compensation Palantir had. I think at one point in 2020, it was 75% of revenue was stock-based compensation. That's insane. That is not good. But if you look under the hood, you're like, well, what is Palantir developing? Why are they giving out this much stock? And then you really look at it and you're like, this is a company that's building technology that might end up changing the world. I'm okay with that as long as I see that coming down over the long term. Palantir stock-based compensation is reducing 27.5% year over year. And last quarter, we saw it reduce another 27%. So for anyone saying Snowflake deserves its valuation because of its growth, its sales, its marketing, blah, 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 they're diluting shareholders badly with stock-based comp, and they're not even building a product that justifies hiring the talent. You know where this SBC is going to? Salespeople. Salespeople are getting this SBC, right? And I'd rather have engineers and people that are building products get the SBC, not just random salespeople. 22% now, right? And as Crossroads says, not great, but it's getting better, and that's what you want to see. You want to see a decline in stock-based compensation, and that's what's happening with Palantir, which is what we're seeing from there. I'm in a finance class right now. I'm in a finance MBA class right now. I wish I could mute the Zoom and just hear that. I love it. Inbound. Thank you so much, man. I used to do that when I was in college. I would like just put on my earphones and listen to something that I knew actually mattered. But I'm happy you're getting your MBA. That's super awesome. Super, super awesome. Amit, what do you think about Palantir share count? We have 2 billion outstanding shares. So thank you for bringing this up, Mr. Snake. Let's actually talk about that. Palantir has the second highest number of shares shorted in the stock market relative to the shares outstanding. So SiriusXM, ticker symbol Siri, which is an audio media company, which, by the way, produced $1 billion less of revenue than Spotify. SiriusXM Radio produced $9 billion of revenue last year. Spotify produced $10 billion, which is insane because Sirius is a media company. Spotify is a tech company getting a tech multiple that's producing the same amount of revenue as a media company. But nonetheless, SiriusXM has 200 million shares shorted. Palantir has about 153 million. The problem is 153 million in comparison to the 1.95 billion shares outstanding is like a 6 to 8% short interest rate. Short interest, like percentage of the overall outstanding shares of the float, which means it's not enough to cause a squeeze. So anyone who thinks this was a squeeze after hours, no, this was, oh shit. Kathy, does anyone know if Kathy bought? Probably not, because I would have got, I didn't even check my notifications, but I'm going to check it right now if Kathy bought. But so the point is there's not enough interest for there to be a short squeeze. There's likely just buying. I think institutional algorithms bucketed Palantir and Nvidia in AI. By the way, C3 was up 10% after hours as well. And the algorithms were like, oh, Nvidia's up 30%. These other stocks we have to buy. And then you had millions of shares bought by a bunch of institutional investors because AI was the theme that they had to ride in comparison to the buckets of stocks that they had. ARK did not buy. Just got the notification. There's the ARK. ARK did not buy. They sold a couple stocks and they bought a couple others, but nothing crazy. So the buying we saw, and Palantir held 12 today really nicely. So the buying we saw in after hours and during the day to maintain $12 in a red market was not ARK. Was not ARK Innovation. ARK bought Zoom today. ARK did not buy Zoom. They did not buy Zoom. Now, so we have 5 minutes left. Some people are saying Palantir acquisition. They're thinking of, look, my quick thoughts on it. I don't think they're going to become acquired because I think Alex Karp has a vision. I am betting on that guy to take us to the promised land by 2030. And I honestly don't want them to get acquired. I want them to kind of see the vision out. They have the F-class shares. I don't think this is a company that has such unique ties with democracies and governments. I don't think this is a company that can be acquired that easily, even if they want it to be. And I don't think Karp says there's a $900 billion TAM. I don't think they're going to get, even if it's a $50-80 billion market cap, which would be a great return for shareholders from this right now, 3-4x. I think there's a lot more here. So I don't think a buyout is really in consideration right now. We'll see more rumors about that as Palantir gets bigger, but we will see from there. Hot Palantir summer. 6 months from now, we will be figuring out who is buying. That's correct. When these 13Gs and 13Fs come out. What do we have? Dilution that isn't being used for R&D is really bad. Correct. So again, Snowflake's dilution of their 264 million in stock-based compensation, that's up 53% year over year, that's not being used for R&D. Like, what are you doing with all that stock? You're not developing or researching anything. You're just giving it to a bunch of employees that are doing what? They have to be doing sales and marketing. Like, if you're not giving it to the smartest people in the company to be able to figure out what does the next decade of the company look like, I'm not interested in stock-based compensation. That's the only reason I allow and I'm okay with Palantir doing stock-based compensation, because I'm like, look, why not? If you're giving it to the smartest people, let those people cook. Let them, you know that meme, let them cook, let them cook. Amit, what do you say when you mean the word premium? I mean the multiple that it gets. So technology companies are usually get a premium in comparison to other companies. Like if you measure price to sales, price to free cash flow, price to book, all of these things end up getting a premium. Obviously, price to earnings, which is probably the best metric, because you expect a tech company to grow. You expect potential. You expect billions of users. You expect massive levels of network effects and S curves and all this stuff. And that's why investors are like, hey, let's give NVIDIA this premium, because they're the guys that are going to be the guy when it comes to AI, even if the numbers don't fundamentally make sense from a pure, discounted cash flow analysis. So that's a premium. And Palantir has a premium on it. Snowflake has a premium. All these tech companies have a premium, but some of these tech companies have ridiculous premiums. And Snowflake's premium in comparison to Palantir, when they're both in the SaaS enterprise space, even if it's growing a little bit more, you listen to Karp speak about how some companies have a moat and some companies don't have a moat. In fact, I'll probably make a video tomorrow reacting to Karp talking about it from 2021, because it's important to recognize what he means. And now you're seeing that play out in real time. And that's not just because the stock is going down. Don't get me wrong. The stock of Snowflake going down today is not the reason for why Alex Karp is correct about companies having a tech moat and other companies not having a tech moat. The stock going down is a byproduct of them not being able to fulfill expectations. So some people are like, oh, well, the market's punishing them for bad expectations. No, the market's punishing them because they can't meet those expectations, because they don't have a product that has the demand, because there's no technology moat that is able to fulfill the $2.7 billion they said they were going to be able to do. That's why the market's punishing them. And that is intrinsically a product problem at the end of the day, which doesn't deserve a massive premium. And my argument is that Palantir deserves that premium because they don't have that same product problem. That is my argument. All right, so that is it for me today. Now, 483 people here. Thank you so much for being here. We do Palantir Daily every single day because the news on Palantir is just becoming insane. So that's why I'm here every single day. We're still going to talk about pretty much everything that's happened today in regards to NVIDIA, Snowflake, etc. in literally 1 minute. I'm ending the stream. If you stay on this channel, there's another stream called Finance Junkies where there's 3 other personalities that are much more handsomer than me. Handsomer is not a word, but you get my point. And we're going to be discussing a bunch of stuff that went on with the market. So go get some food, get some drinks. We're still talking about the market. This was 27 minutes exclusively on Palantir. Now we're going to get into everything that happened today in 30 seconds. So I'm ending the stream and you guys can see me in the next one. Thank you everybody for being here. I'll see you in 30 seconds on Finance Junkies.